when it comes to Nike, we know the Jordan brand is doing fairly well, but it's a premium offering, and Nike can't just take that and run with it completely. What is the growth story here? What is the growth strategy for Nike, given that quarterly sales fell short of estimates and revenues you expect to increase only 1% for the full year?
Yeah, it's a great question, and it's something we're asking ourselves, and we're going to listen for in the call. We're really worried that the company, it just doesn't have the next leg of growth, and we're just, the valuation it trades at 25 times earnings, and it typically over the last few years it traded well above 30, but we don't think that valuation's fair anymore. We just don't see, significant double-digit growth from the company.
And of course, we've been talking about how Nike shifted its distribution to really focus more on its own branded stores and its own website and removing some of those third-party distributors. Now it's gone back in the other direction because it became clear that old rivals and new rivals kind of, sucked up the oxygen in its absence. How hard will it be to repair some of those relationships?
Yeah, we think, their strategy, I think, is still working. I think direct-to-consumer is still the way to go for them. It doesn't make up over, some of these other companies have 50+% direct-to-consumer revenue, whereas Nike, typically is, in the 30 to 40% range. So, we think that that's still probably the best direction for them. We think there's still room to grow there. When it comes to like Foot Locker and some of these other wholesalers like Dick's, we think, they're going to probably go back into those stores a little bit, but, we really think over the next 10 years, Nike's going to really expand that direct to consumer, push the e-commerce platform that they've built out, and we think that'll benefit their margins.
Look, for whatever softness they're having right there on that direct-to-consumer side, I think most of us can agree it was obviously a very prescient when they launched that, ahead of its time, really, and it's obviously going to be a fixture. But as you know, Zach, it also has to do with the products they put out there, innovation, and the biggest criticism that we've heard from investors and to a certain extent from consumers alike is that it's just the same old stuff, man. When do we get, something that's a little bit, more tantalizing? Is that going to matter?
Well, that's exactly right. We're waiting on the call. We've gone back and forth from sells and holds over the past year or two, and we're trying to figure out what's next for them. We've had these competitors, Hoka and On Brand, and they've done really well. You've seen them grow significantly over the past few years, obviously from a much smaller base, but it's interesting. This is the first real time that you're seeing Nike really struggle with competition. I go out, I go for a run or I'm at the park, 50% of people are wearing Hoka now.
Yeah.
And overseas it's more On Brand, but it's very interesting. This is the first time you're seeing this from this company, because for so long they were a staple growth brand. They were able to grow in China, which 3% growth just this quarter and for the year. It's not much. And so, kind of what's next for them?
Yeah.
Exactly right.